Since 2022, more than 15 major insurers have pulled out of Louisiana. Over 400,000 homeowners have received cancellation notices in the past 12 months alone. Premiums have tripled, and across coastal parishes, the traditional insurance market is collapsing entirely. If your Louisiana home insurance was just canceled, or could be any day now, a single wrong move in the next 30 days could cost you everything. Here's the survival plan. A cancellation notice lands in the mailbox. The envelope carries more than a warning. It starts a countdown. In Louisiana, the law gives homeowners exactly 30 days from the date the notice is mailed. That is not a suggestion, it is a statutory clock, and when it runs out, the home is legally uninsured. For over 400,000 families in the past year, this letter has arrived out of the blue. Behind every envelope is a story: a couple in Terrebonne Parish, a retiree in St. Bernard, a young family in Lake Charles. Each one faces the same hard math. Fewer than 15 private insurers remain in the state, and premiums have nearly tripled since 2021. The numbers are staggering. 15 major carriers have left Louisiana since 2022. In just 12 months, more than 409,000 cancellation or non-renewal notices have been sent out, almost 1 in 5 homeowners. The average annual premium has shot up from $1,200 3 years ago to over $3,500 today. For many on the coast, rates are even higher. The traditional market is shrinking so quickly that some parishes now have almost no private options left. This is not just about higher bills. If a homeowner misses the 30-day window, the mortgage company can step in and force place its own insurance. These lender-placed policies cost 2 to 3 times more, often $4,000 to $8,000 a year, and only protect the building, not personal belongings or liability. A single day's lapse can trigger a default notice from the bank. The stakes are immediate and personal. The 30-day clock is ticking from the moment the cancellation letter is mailed. Every decision now matters. 30 days, that is the legal shield between a cancellation notice and a home left uninsured. Louisiana law, under revised statute section 22-1015, requires insurers to mail a written notice at least 30 days before a policy ends. The clock starts the moment the notice is mailed, not when it is opened. That means every day counts, and there is no grace period if the letter sits unopened on the kitchen counter. The first step is to find the mailing date on the notice, mark it clearly on a calendar, counting out 30 days, including weekends and holidays. This is your window to act. If the date is missing or unclear, call the insurer or the Louisiana Department of Insurance and request confirmation. The law is strict. If the insurer sets the cancellation for even a day before the 30-day period ends, the notice is invalid. But if you miss the deadline, the consequences fall on you, not the company. Keep the original notice and make copies, digital and paper. Archive everything: letters, emails, phone logs. If there is any dispute, this documentation is your evidence. Next, review the notice for 3 things: the reason for cancellation, the exact effective date, and instructions for appeal. If any of these are missing, you have grounds to challenge the cancellation with the Department of Insurance. Missing the 30-day window hands control to your mortgage lender. Lenders can force place to their own insurance, often costing 2 to 3 times the market rate, sometimes $4,000 to $8,000 a year. These policies only protect the building, not your belongings or liability. A single day without coverage can trigger a default notice from the bank. That is why marking your deadline and acting immediately is not just smart. It is essential to protect your home and your finances. Citizens Property Insurance stands as Louisiana's insurer of last resort. When a private company refuses to renew or cancels your policy, Citizens is required by law to step in, but only if you can show proof you have been denied elsewhere. That denial letter is your ticket. Without it, the application will not move forward. Alongside the letter, you will need a completed property questionnaire, a copy of your most recent homeowner's policy, and documents showing you own the home or have a valid mortgage. Missing any part of this packet is the #1 reason for delays. Once everything is ready, you can apply by phone, online, or by certified mail. Citizens' official processing time is 48 to 72 hours from the moment they receive a complete application. In most cases, the new policy is issued before the private coverage runs out. The timing is critical. Citizens coverage is set to begin the exact day your private policy expires, as long as your application is approved before that date. This seamless handoff prevents any uninsured gap. A single day's lapse can trigger lender action or leave you exposed. The coverage itself is broad. Wind, hail, fire, and liability are included, but flood damage is not. Flood must be covered separately through the National Flood Insurance Program or a private flood insurer. Liability limits reach up to $300,000 per occurrence, and wind deductibles are higher in coastal parishes, $2,500 in flood zones, $1,000 inland. Dwelling coverage is capped at $500,000 for most homes, with higher limits in the most hurricane-prone parishes. Premiums can vary sharply by location, but Citizens is designed to be a safety net, not a bargain alternative. The most important thing is to start the application as soon as you have your denial letter in hand, ensuring you remain continuously insured and your mortgage stays in good standing. Surplus lines insurance steps in when both private carriers and Citizens cannot meet your needs. These policies are written by non-admitted insurers, companies not licensed by the Louisiana Department of Insurance, but allowed to operate in high-risk situations. Over 200 licensed surplus lines brokers serve Louisiana, each required by state law to carry a special license and bond. Their role is to connect homeowners to national and international insurers willing to take on properties that standard companies will not touch, often because of location, claims history, or construction type. Expect premiums to run 20 to 40% higher than what you would pay in the regular market. This uplift reflects the higher risk and the lack of state oversight on rates. Unlike standard policies, surplus lines coverage is not backed by the Louisiana Insurance Guarantee Association. If a surplus lines insurer fails, there is no state fund to step in and pay outstanding claims. That is why every surplus lines policy must include a disclosure stating it is not protected by the guarantee fund. It is a legal requirement, not fine print. Before signing anything, verify your broker's license using the Department of Insurance online portal. Ask for the surplus lines disclosure form up front and check the AM Best or Standard & Poor's rating of any carrier you are considering, and look for at least an A- grade. Request written quotes from at least 3 brokers to compare costs and terms. Once you agree on coverage, the broker will issue a temporary binder, usually good for 30 days while the full policy is finalized. You will need to pay a deposit, typically 30 to 50% of the annual premium, right away to secure your spot and avoid any gap in coverage. Keep all paperwork, including the binder, invoices, and disclosure forms, in a safe place. Surplus lines insurance can be arranged in as little as a week, but careful vetting is essential. The right broker can keep you insured and your mortgage compliant even when the traditional market shuts its doors. A state-funded program now offers Louisiana homeowners up to $10,000 for hurricane hardening upgrades at no cost to you. The Fortify Home Grant covers roof reinforcements, impact-rated windows, and secure doors, all designed to help your property withstand the next major storm. These upgrades are not just about safety. Homes that complete the program and meet the fortified standard can qualify for insurance discounts ranging from 25 to 50%. But there is a catch. Funding is limited and applications are processed first come, first served. To apply, visit the Louisiana Department of Insurance website and follow the step-by-step instructions. Acting quickly can mean thousands saved each year. Flooding is not covered by any standard homeowners policy in Louisiana. To close this gap, every homeowner must secure a separate flood insurance policy, either through the National Flood Insurance Program or a private carrier. The National Flood Insurance Program is a federal program, and in Louisiana, the average annual premium ranges from $800 to $1,200. Private insurers now offer flood coverage too, sometimes at a lower cost or with more flexible terms. Storm surge from hurricanes is always classified as flood, not wind, so lacking this coverage means a total loss is possible after even a minor event. An agent with the National Flood Insurance Program can help you get a quote quickly, but do not wait. There is typically a 30-day waiting period before new flood policies take effect. Shopping private options in parallel can speed things up and may save you money. Plugging the flood gap is essential before storm season begins. A single uncovered day hands control to the bank. Lender-placed insurance is not just expensive, it is punishing. Expect an annual bill of $4,000 to $8,000, often tacked onto your escrow without warning. These policies only protect the structure, never your belongings or liability. Industry analysts warn that as global reinsurance costs climb, Louisiana's market will keep tightening through 2026. Acting now is the only way to avoid a forced policy and lock in coverage before rates climb even higher. Every day without action risks lender-placed insurance at triple the cost, or worse, complete loss after a storm. Louisiana's 30-day protection window is your legal lifeline, not a suggestion. In a market this volatile, waiting isn't safety, it's surrender. Make your next move before someone else does. Stay safe.